Thank you very much. Hey, Ed Morysiak here from East Toronto Living. And in this week's video, I'm here with Chris Allward. And Chris is a mortgage professional, and we're going to go in the ins. We're gonna discuss the ins and outs about getting financing for real estate these days, because it's been a topic of discussion, and it's high time that we do a deep dive on that topic. So if you want to hear more about this, stay tuned. Okay, before we continue, if you like this kind of content, if this is useful for you, don't forget to like, subscribe, share, and leave a comment, because it helps the channel grow. And I love comments because I can gear my my content based on the comments that come in. And don't forget, if you're thinking of buying or selling any real estate, or you got questions about real estate, here's my contact information. Call me, text me, send me a carrier pigeon, send me an email. Whatever your preferred method of communication is, and let's meet for coffee. I mean, I just met somebody last week for coffee, and we had a great time. We went over to a nice organic coffee place nearby where I live and where he lives, and I can't wait to meet all of you. Okay, so all right, Chris. Without further ado, Chris, good to see you. Hey, I love the hairdo. You folks notice that all the guests that come on this show all have the same hair?
I'm honored to be part of the club. Thanks for having me on.
No, awesome, great. I'm glad to have you here. And Chris is a very experienced professional, and I'm thrilled to have him. Chris, just tell me about yourself, and how did you get into the lending world, and just briefly give me a once over about.
Sure. So that's I guess my 14th year of real estate lending. So I've been at it a good long while. Do that within the Bank of Montreal, and ultimately, I guess how I got the start. I sat down 20 years ago, maybe, with a financial planner to get my own house in order and start to build for the future. As a customer, I wasn't in the financial services business at all at that time, and thought, gosh, this is something that I could really get behind, sink my teeth into. The notion of helping people figure out how to get from where they are to where they want to be, and make their finances and financial decisions work for them was really appealing. So then took the steps to get on that path, and ended up, while the genesis was really more around saving and investing, ended up more connected to the notion of strategic borrowing strategies. And then a decade and a half later, here we are.
Awesome. That's great. Okay. I come across this on occasion, and maybe you can clear it up for me. Now, a lot of realtors, a lot of gurus and gurus are saying, hey, maybe it might be a better idea to go and use an independent mortgage broker versus going directly to a lender at the bank and all that. Now, maybe you could clear some up there, because there's probably some pros and some cons. But I mean, if I'm gonna walk into Bank of Montreal there, and I meet you there, well, I mean, what would be the advantages of working with you directly at BMO?
Yeah, I mean, what I'll say before I answer it directly is, it's not kind of like on social media. I mean, I guess we're on there now.
Oh yeah. Are we ever?
You can pick anything and try and create an advantage or a disadvantage or a disconnect or a rivalry or a controversy or an adversarial relationship. I think, like anything, when we're making these great big decisions, the big things like bank versus broker are maybe the wrong places to be directing our energy. In the end, my view is it's about the advisory relationship that we have with our chosen professionals. And that's got nothing to do with whether someone's working independent or working within the bank. And the kinds of things that might push us or pull us toward one or the other are going to vary moment to moment. Somebody might say, hey, I want to stay with the bank because I've been at this bank for 40 years.
Yeah, and it's also convenient too. If you deal with BMO, and I mean, do you want to split everything up and go over to this lender, and then it's all on your profile? You go, oh yeah, there it is, and boom, payment.
Right, and somebody might say, oh, I'm with this, bank with a different colored logo that isn't blue, and they're not doing anything for me, right? And they might have a motivation to make a change. And somebody else might say, you know what, I just want to focus only on interest rate. Everything else is irrelevant. And they might make their decision that way. And somebody else might say, you know what, I want to have a close relationship with someone who's going to invest the time and energy to understand my circumstances, give me advice, and help me make the decision that's best for my family. And there are people in our business, just as there are people in any business, that will satisfy all of those kinds of needs. And what I would say then, kind of more directly to your question, is for my business, I fall in that final camp, right? Of let's invest the time and effort and energy at the front end of the discussion to figure out what's the best thing, what are the sequence of decisions that a person or a couple or a family ought to make in order to fulfill, whatever that dream is, whatever's on the vision board. I mean, I'll pick any of those cliches. That's where I've organized myself to come to the table, right? And historically, have been in the financial planning space, have been in the private banking and wealth management space. And so just bringing some of those strategies and tactics and structure to the really big decisions in a world that's otherwise very transactional, right? This business is built to help people make quick decisions, lend them money, move on to the next. For me, it's a little bit more of a time investment, but I think we put people in a better position overall.
I like it. Okay, so the multi-million-dollar question now is, when we just recently saw another bank rate cut, which is awesome. What do you see happening, with everything going on south of the border and what's happening here with the election and what's your inside scoop and your best appraisal of the situation here in the next couple months?
Best guesstimate's probably
best guesstimate. There we go.
My favorite phrasing.
Fair enough.
I always joke with clients, and I'll make the same joke here. I don't listen to my opinion. I flunked economics the first time around, but being inside the bank, I do have the good fortune of being very close to our economics team. Right, one of the top economics teams in the country.
Sweet.
And regular conversations with our senior economists. Had lunch with our chief economist a couple of weeks ago, and the opportunity to pick their brains and frankly have them kind of translate. Right, economics has its own language. Have them kind of translate that then back into English that the rest of us speak. And so what our team is currently forecasting for 2025 would be 3 more 0.25% rate cuts from the Bank of Canada by the end of the year.
Okay.
One of those was already forecasted pre-tariffs, kind of the last cut to bring the post-COVID rate hikes back to a neutral level. And then an additional 0.5% of cuts this year that would be tariff-based. So the expected outcome of these tariffs in the short term is some impact on the Canadian economy. Maybe not necessarily a full-blown recession, but that word's being thrown around.
Indeed.
And if that were to happen, the Bank of Canada would likely need to make those extra 0.5% of cuts in order to keep economic activity at the level that is within its mandate. And so, what that would do, brings variable mortgage rates down accordingly. So 0.75% additional reductions in variable rate borrowing. We don't anticipate a ton of movement in fixed rates. Fixed rates are already at a level that is anticipating those policy rate cuts from the Bank of Canada. But ultimately, that puts mortgage borrowers in a position where they've got a choice to make, right? Do I want to go with the kind of safe and sound, predictable fixed rate approach? That's what the bulk of Canadians historically do. Or do I want to let's say, roll the dice and peg my mortgage rate to the Bank of Canada policy rate decisions. If I did so, I might see some noticeable decreases in my interest cost. And given the expense of housing, right, it's a significant chunk of our overall expense, that presents an opportunity then to pay less interest, accelerate repayment on the mortgage, and get that great big loan paid off faster.
Fantastic. Well, there you have it, folks. Chris Allward here, and with BMO Mortgages here. If you want to get in touch with Chris here, I'll leave his information down, or you can message me through the channel, and I'll put you in touch. And he can definitely take care of your lending needs. I think you'll be in dynamite hands, hands down. No pun intended. All right, all right, folks. That's it for this Thursday. Remember, every Thursday at 5 o'clock and every Saturday morning at 7 a.m. I put out a new video. And don't forget, don't forget to like, subscribe, share, and leave a comment. And call me for any real estate questions that you have. Here's my information. Here's all our information, and that's fantastic. And I want to thank Chris for coming in once again to the studio.
Pleasure.
And thanks so much again. Bye for now. Thanks, Chris. Whoa.
That's neat.
That went very well. Actually,
Yeah.
that was